Good morning and welcome to AROA Biosurgery's investor webinar for the March quarterly report released on the ASX this morning. Before I hand it over to Brian Ward, the CEO, and James Agnew, the CFO, just a reminder, you can submit questions via the Q&A button at the bottom of the screen and we'll get to those post the brief presentation. Brian, I'll now hand it over to you to get started. Thanks very much.
Great, Simon, thank you. And thank you to everyone that's joining the webinar this morning. So look, we're delighted to be here today and present our preliminary unaudited full year results. We've revenue of approximately $39.2 million. So really delighted with that. That being $37.7 million on a constant currency basis, and exceeding our guidance of $34 to $37 million. So fantastic result, and delighted that we've come in ahead of our forecast. This represents a constant currency growth of 84% over the previous year. So fantastic to be able to deliver that. In terms of this result, we grew 19% over the previous half and over 66% on a constant currency basis over the previous comparable period. Preliminary unaudited total revenue for the year we expect to be $39.7 million, representing a 78% growth over last financial year. Net cash outflow from operations was $5.1 million. This primarily reflects the timing of our cash receipts. So we had a very strong second half of the year, and this means that obviously an increase in our debtors. Net cash outflow from investing activities was $1.4 million, and this reflects our investment in our manufacturing facility and continued expansion. We finished the year with strong cash balance, $56 million, and it would have been stronger, obviously, had we not had that cash out, the debtors build up. From an operational perspective, good results with Myriad. We're seeing very good growth there. Myriad was awarded a gold award for the most innovative device at the Journal of Wound Care's World Union of Wound Healing Society Awards in 2022. So very pleased to have that recognition for Myriad as a product. We began commercializing Symphony, and so we're pleased to have started that, and we're focusing on the VA setting for that initial rollout. We're beginning to see the environment within the US improve, and we're seeing industry conferences come back online. We're seeing in-person meetings come back. So very pleased to see our sales team getting out and attending these events and beginning to build our profile. We've also begun to manufacture out of our new facility. So we're now beginning to use that facility and bring that capacity online in an incremental way. So Simon, I'm going to pause there to take questions.
Great, thanks Brian. Just a reminder for those on the call, if you did want to ask a question, please do so via the Q&A panel at the bottom of the screen. First question, can you just talk to the increase in staff costs being incremental $4 million annualized? Where does that potentially level out, and how many extra people were hired?
Yeah, sure. So look, as everyone should be aware, as part of the strategy this year was to grow our sales team. So we've added, over the last half, probably added about 13 field sales team. So we have a total of just under 30, so 29 field sales team. Plus we also have the 8 inside sales team. Look, going into the next year, we've sort of said, look, we could add another further 10 to 15. So that's likely to increase over the next 12 months. The other thing we've also added to is we've added further development resource, really to start to sort of to accelerate some of our new product pipeline. I mean, I'd say that that's probably a bit more leveled out in terms of staffing.
Great, thanks, James. Next question from Elise Shapiro at Canaccord. Can you just let us know on the number of new accounts for Myriad, please?
Yeah, so the last time we reported, we were at about 40, just over 40 accounts, and so we've seen in a really tricky environment a whole lot of new accounts open up for us where we now are selling product. So we're now up to 72 accounts, and so fantastic job by the sales team bringing those online, particularly in the current environment where the administration side of hospitals is very slow. So we are seeing good growth now coming through in those account numbers.
Great, thanks, Brian. Another question from Elise. How much more Capex is required for the manufacturing facility, and any changes attributable to increases in material costs, etc.?
Yeah, look, so we've probably spent about 3 million to date on the manufacturing capacity expansion. There's probably another 5 million. That 5 million's more associated to the sort of plant and equipment that will bring online incrementally over the next 12 to 18 months.
Thanks, James. Are you able to provide any colour on the revenue split of AROA and TELA and on Myriad sales growth? Thanks.
Yeah, look, we're about just over 60% of the revenue coming through is with TELA. Myriad's obviously coming off a low base, and the good thing with Myriad we're seeing is very strong performance in the second half of the year. So we're pretty optimistic going into the current year with growth prospects for Myriad. But look, it is coming off a small base. It's a small proportion of the total revenue at this stage.
Thanks, Brian. Next question is from Seb Clemens at Jarden. Can we get a split of, this is a double-up question, split of earnings between AROA and TELA, which you've just answered, of the AROA sales, what is split by product? And then just a follow-on question, just the sales run rate in Q4 versus Q3.
Yeah, look, the sales run rate, look, we've done 20 million in the last half. I would prefer to go based on half year versus quarterly, but half year we did 20.5 million. That's on a constant currency. So, and basically on a run rate close to the mid-40s.
Thanks, James. Just a follow-up question from Seb. You've commenced a limited launch of Symphony in the US. Can you provide any comments on reimbursement, and does management expect to increase sales staff for the launch?
Yeah, so at the moment, the reimbursement for Symphony is still uncertain in the outpatient wound care setting. We do have a code, it's a code, and so we're working through what that means for selling within that setting. So what we've chosen to do is to do a limited launch in the VA setting. So reimbursement in that setting is quite different. We're able to target that setting immediately. So we'll be focusing predominantly on the VA setting, selling a little bit into the inpatient hospital setting as well. And then over the course of the year, as the situation clarifies with regard to A codes and the skin substitute category, then we'll look to potentially scale up our sales in the outpatient setting.
Thanks, Brian. Question from Shane Solly at Wilson's. Well done, guys. Can you update Myriad use case outcomes and data?
Yeah, look, we've seen some really good outcomes with Myriad. So it's consistent with what we're seeing across the whole AROA ECM platform. So rapid tissue formation, good vascularization, and the ability to either close early or graft early. So those sort of outcomes are holding up right across the product portfolio. We tend to be seeing Myriad used in large sort of volumetric tissue repair, and so that's trauma, tumor excisions, some of the inflammatory skin conditions, and where large amounts of tissue have been lost. And so typically, we're seeing good clinical outcomes, certainly compared to competing products, but also we're able to deliver substantial cost savings for hospitals as well. So the value proposition for Myriad in hospitals is very attractive, and we're seeing good traction as a result of that.
Great, thanks, Brian. Just a follow-up question from Elise at Canaccord. Can you just comment on the level of partner interest for Dead Space Management Program? When and what is the next catalyst here?
Yeah, so at the moment, we're really focused on getting the product approved. And so we're putting together the package for regulatory submission. We expect to be taking that to the FDA in the last quarter of this year. And then we'd expect the approval process to take somewhere between 6 and 12 months. So we're working through getting everything together for that regulatory submission. On the partnering side, we're looking at different options there. So obviously it fits very well with our existing sales force. There may be opportunities outside of our sales force to partner some applications as well. But I think it's early days in terms of those discussions.
Great, thanks, Brian. Just a question from Melissa Benson at Wilson's. Are you starting to see increased cross-selling opportunities with product lines with Myriad and Symphony now launched, i.e. singular clinicians using more AROA products in combination on a single patient case?
Yeah, I think we're seeing combinations of both and AROA products seen. I think probably more so we're seeing combinations of AROA products being used. So we're seeing Myriad Matrix, Myriad Morsels commonly be used together. We're seeing patients that are treated in the doctor's office being followed up with Endoform. So we are definitely seeing the complementarity of our product portfolio start to pay dividends. We think we'll see the same thing with Symphony. So we're in a situation where we now have a product portfolio where we can treat in different sites of care, we can treat at different stages of healing, and I think that will continue to pay dividends for us over the coming years.
Great, thanks, Brian. That concludes the Q&A. I'll just hand it back to you for closing remarks.
Well, we're delighted with the result that we've delivered. It's certainly ahead of guidance. I'm really pleased with the momentum that we've had over the last 6 months. We look forward to building on that in the next 12 months. We are seeing an improved operating environment in the US. We think that we have very good foundations in place for the coming year to build on this result. So expecting a nice uptick in the coming year. So thanks to everybody for joining, and have a good rest of your day.
Great, thanks, Brian. Thanks, James. Thanks all for attending.